This is today's Daily Market Comment by Mario Sachikiriakos. I'm Christina Marujos, and thank you for joining us here at XM.com. The US dollar has displayed an uncanny ability to absorb bad news without even a scratch lately, a power that was on full display yesterday after the latest US inflation stats disappointed. The annual core CPI rate fell by more than expected to reach 4%, adding credence to the narrative that inflation has already reached its apex this cycle and eliminating any surviving expectations for a Fed taper move next week. That initially took a bite out of the greenback, which fell across the board as Treasury yields tanked. However, the reserve currency bounced back before long as stock markets rolled over and traders started playing defense. As for the dollar, the big picture remains bright. Inflation might still be a major theme next year. The labor market has almost recovered, consumption is off the charts, the housing market is booming, and Congress is trying to unleash more spending to juice up the recovery. Wall Street resumed its sell-off yesterday despite the disappointing inflation figures. The S&P 500 fell another 0.6%, but the index is only 2% away from its record highs, so it's difficult to call this a real correction. What's striking is that the S&P 500 bounced off its 50-day moving average yet again, a technical barrier that has acted like a trampoline for the index throughout this incredible rally. The catalyst behind this baby sell-off isn't entirely clear. It could reflect concerns around higher taxes and less central bank liquidity being on the horizon, or the risk of economic fallout from China as the economy slows while local authorities are busy grinding their regulatory axe. The main beneficiary of the cool down in inflation has been gold, which took advantage of the slide in Treasury yields yesterday to power higher. While the Fed pushing back its normalization process is good news for bullion, it's not exactly a game changer either. The endgame is still higher real rates that take the shine off bullion. Finally, Canada's inflation stats will be released today, although the main variable for the Loonie might be how the upcoming election plays out. For the FX market, the best scenario might be another Trudeau victory that allows for greater government spending in an environment of tighter monetary policy as the Bank of Canada intends to raise rates next year. This was today's Daily Market Comment. Thank you for watching at XM.com.